Charlie Munger, How to Invest for Beginners. Vice Chairman Charlie Munger works for the largest investment firm in the world, Berkshire Hathaway. Warren Buffett and Charlie Munger, two brilliant businessmen, are largely responsible for the company's investment decisions. Since Munger's entrance, Berkshire Hathaway has increased its returns by 2 million%. That is 20,000 to 1 now. Therefore, if you added 50 again, you would now be a millionaire. There are 6 pieces of Munger's investing advice that has helped attribute to this ridiculously high return. Number 1. When you see a sale, buy big. There are so many of you today who desire to get wealthy through careers in finance. Of course, not every one of them will be wealthy. The lowest 99 will be. 99? That's just how things will proceed. I think that will apply to the new generation of nerds because I look at the people in my generation who were nerds, who were patient and rational and eventually did well, who lived within their means and worked hard to be sensible, who grabbed opportunities with vigor when they presented themselves, and so on. Number 2. Look the inefficient markets for stock opportunities. What do you think will be the major areas of potential over the next 50 or even 100 years for a 23-year-old with great ambitions, some start working cash, and genetic wiring for fields like investment, mathematics, and technology? And what strategy and technique would you employ if you were in my position? The place to look when you're young is in the inefficient marketplaces where you shouldn't be attempting to guess for the purpose of genuinely studying, tackling, and conquering these areas of opportunity for the purpose of tremendous value creation. You want to go when you're young, regardless of whether you know one drug business has a superior medication pipeline than the other. You shouldn't try to forecast if the stock market will increase or whether the yield on long-term bonds will alter, since that's incredibly inefficient. In that kind of game, you don't have anything to go. But you might have a lot going in games that not many people play, and perhaps even have their perspectives on the matter twisted in the wrong direction. A fantastic example of an opportunity to make a lot of money is TheRTC. I mean, here was a seller of real estate valued at $100 billion, and the folks selling it had no financial stake in it and were ready to close the deal. They were selling at a terrible time when those who had previously been risk takers and lenders stopped lending to them. So you had a great environment as a backdrop, but there was an imbalance of intensity in the analysis of the situations between the seller, which was the government, and a group of individuals who had no financial stake in it and were likely eager to finish the job, and the buyers, who were generally cautious because more ventures had been made over time but had withdrawn from the market. There was a lot of property, so you have these chances now and there will be more in the future. Even though there will be days when you feel as though there aren't enough opportunities in your life, there won't be any storage. Number 3. Think like a business owner. My recommendation to you is to avoid focusing on your career so much that you fail to view the issues with business strategy from the perspective of the owner, since this will help. In fact, General Motors did just that. They had a lot of careerists and an owner who would recognize their condition as hopeless right away. Nevertheless, they romped through it with a lot of denial, foolishness, and pomposity. Naturally, the largest corporation in the entire world filed for bankruptcy, and none of those hotshot executives would have recognized the situation as hopeless had they been thinking like an owner. Number 4. Don't overcomplicate investing. It requires a lot of high IQ in the world of investing. People are attempting to be more competent and common. There is perhaps no other activity that generates as much interest, and weird things have occurred in the past. One of the major local investment consulting companies was looking for a means to outperform competing investments. They argued that if we simply ask each of our most brilliant men for their single best idea, then we can create a formula with this collection of best ideas. We have all these brilliant young people from Wharton and Harvard and other institutions, and they work so hard to understand business and market trends and everything else. They believed we would perform significantly better than average, and because they lacked education, they believed this to be realistic. They tried it out and it was a complete failure because this is what happens when you attend Harvard and Wharton. The second time they attempted it, it completely failed, and the third time they tried it, it also failed. In fact, what they were seeking was a modern-day version of an ancient alchemist who sought to convert lead into gold. They believed that purchasing large quantities of lead and waiting for a magic wand to transform it into gold would be a fantastic way to gain money. Because the problem is so straightforward and there are many intelligent people in China, where people tend to be slightly smarter on average, this counseling center was seeking the equivalent of turning lead into gold. Number 5. Don't be afraid to go back on your investment decisions. Being willing to change course, however how unpleasant it may be, is also helpful. We originally chose to permit the general derivative book to continue, and as we see it here, we believe Berkshire is the only signed company in America operating off of a derivative book. Reversing that choice is a highly unpleasant task, but we are more than eager to do it. Even though no one else is doing it, it is completely obvious, at least to me. Number 6. China offers some low price and high quality stocks. Look everywhere at once, just as you couldn't run a marathon in 12 different states at once. As a result, you need a system for choosing where to look. This is your hunting ground, but in every situation, you're looking for value. It's interesting that you mentioned that the strongest companies aren't in America. Chinese businesses are more robust than ours and are expanding more quickly. I've got a stake in them. A prosperous investor in the entire room where he makes investments in China. In reality, when hunting is simple, we all do better. For instance, I have a friend who enjoys fishing. He claims, have a straightforward fishing guideline that works. The seafood you desire is inexpensive. It is extremely easy and simple. You should probably look for another fishing location if the fishing is particularly bad where you are. And it's one of the qualities about Munger that I admire. He's direct in his speech. He simply lays out the process for you. It makes no difference whether you like it or not. They've worked for him all his life. His total wealth exceeds 1.65 billion. The secret to constructing this has been smart investing. We can undoubtedly learn a lot from Charlie Munger. From our discussion, what have you learned about Munger's advice? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video. Bye!